Excellent. All right, Kari, I'm going to go ahead and assume that we're gonna press go here. Okay, hello everybody. I am not Kari Ragan. I'm Ian Howell, who was to be her her co-host tonight for our guest. But Kari, unfortunately, she is monitoring this webinar behind the scenes, but she is unfortunately at a veterinary hospital with her beloved puppy right now. He's doing better now, so you don't have to worry about that. But she has been dealing with that for the last couple of days. So I'm going to solo lead this interview tonight. Before we get started and I introduce our guest, I would just like to say thank you as always to Scott McCoy at Inside View Press for his ongoing sponsorship and support of the NATS chat series. It is my great pleasure to introduce all of you out there in NATS webinar land to Dr. Elaine Grogan Luttrull. She is the founder at Minerva Financial Arts, and I'm going to go ahead and ask her to kick off this conversation tonight about tax structuring, how to think about running businesses, and my hope is a wide-ranging conversation we can all have. Welcome.
Thank you so much, Ian. What a pleasure to be joining you this evening. And hello, folks who are listening live and those of you who are listening on the recording later. It is absolutely a pleasure to be here. Talking about taxes, believe it or not, is one of my favorite things to do. As Ian said, I'm Elaine. I use she, her pronouns, and I am joining you from Dublin, Ohio, which is 𝘗𝘯𝘴 and Hopewell Indigenous and Cultural Lands. That's where I have been for about 13 years. I spent about 10 years before that in New York and have had all sorts of adventures sort of across the country since then. Professionally, I am a certified public accountant. That's a CPA, that's the tax person that does most of the strategy tax stuff. I also have something called a personal financial specialist designation. That's sort of like the CPA planners or financial planners in CPA world. So that's the investment side, the retirement side, maybe the cash flow or long-term kind of planning side. And then I am an accredited financial counselor. And in 2016, I finished a graduate program in financial therapy. So the counseling side and the financial therapy side is all about the human side of money. So between those designations, right, we can cobble together a lot of really interesting conversations that are very human-centric and very arts-centric, because all of my work is with creative individuals across the creative spectrum. That includes literary artists, performing artists, and visual artists. Tonight, of course, we're focused on the performing artists and music teachers in particular, but my work spans the creative spectrum, and I work with incredible funders all across the country. So if you are finding yourself applying for NEA funding or funding through any of your state arts councils or commissions or any of the regional bodies, or if you're getting Creative Capital Awards, or you're dabbling in theater world and maybe getting funding from TCG or any of those other groups, or if you were a Young Arts winner once upon a time, there's a very, very good chance our paths will cross, because I have the great privilege of working with awardees from those and many, many other just really incredible groups, all of which makes me basically the luckiest money professional ever in the history of money professionals, because all I do, Ian, is hang out all day with really cool people talking about money.
It sounds like it does not suck at all. That's fantastic.
It does not. It's pretty amazing.
I think it's great too that you're just kind of setting the stage that this can be an industry where success is not a dirty word, and that we can kind of approach it to maximize returns, but that also allows you to maximize your peace of mind, so that you can then put your positive energy not towards worrying about that, but instead how to best serve your own client base and how to create great experiences for them. Great, I would love to just jump right into the list of questions that we had been talking about. Everyone, I sent some notes in the chat, so we have Dr. Luttrull's website, if you'd like to grab that. And also, please make use of the questions feature. I will read those as soon as they come in, and I will try to feather them into the conversation. I think one of the big questions that people have, and probably one of the areas where people who come from the performance side of singing are probably the most undereducated, is if you're going to open a teaching studio, like how should you structure it, right? So should you be a sole proprietor? Should you invest in an LLC? How should you invest in an LLC? Should you be a S Corp, a C Corp? Like there are a lot of options, and it seems like the tax code has changed radically in the last 10 years. So I would just love to get your sense. How do you recommend people navigate those questions?
Such a great opening question, right? Because it feels like a really crucial decision that is pressure filled, right? And the reality is there are no bad options. There are pros and cons to each of those structures. And as a voice studio evolves over time, their needs may change, and so their structure may change, right? So I am a big believer in there are no right or wrong answers or absolutes. So let's talk through the options. Sole proprietor is your easiest option. That is one person doing business for themselves. Depending on the state or territory where you're operating, you might not even need to register your sole proprietorship. Some states just let you just decide you're a business, and then that's okay. Other states do require you to file some paperwork, either with your county or with the Secretary of State. Totally and completely fine. It's pretty easy and usually very inexpensive.
Is that easily Googleable?
However, oh, sorry.
Is that easily
It is easily Googleable? It
Okay.
is, yes. And you probably know where you're based. I would probably Google starting a business in, and then type in whatever your state or territory name is, because one of the results, probably not the top one, but one of them is going to be to your Secretary of State, and possibly your Department of Revenue in your state. That's where the tax stuff is going to live. But the Secretary of State is generally where all the business formation things happen. And many states and territories have really fantastic guides about everything you need to do. And in some states, some of my favorites, Pennsylvania, New Mexico, there are a handful more on the list. They actually have you answer a bunch of questions, and then they will like spit out a checklist to you of everything you need to do based on your industry. I know, it's fantastic, right? So don't sleep on those resources. Don't judge the design of the website quite so much, right? It is often a governmental website, which is, has its own particular type of flavor, but there are some really great resources there. So definitely easily Googleable, and go to the primary source as opposed to some random person on TikTok, if you could.
For sure.
So if you are hiring employees, not contractors, but if you are hiring employees, that is definitely a time when you need some liability protection. That is the downside of a sole proprietorship. There is no inherent liability protection. You can buy insurance, and you probably should, right? But there's no structural difference or separation between your personal assets and your business assets. So what that means is if you have an employee that screws something up, your personal assets as a sole proprietor business owner could be at risk to settle that wrongdoing, right? We don't want you in that situation. So if you hire employees, definitely be an LLC at least, because you need that liability protection. And really, that's the main reason, right? So LLC is all about liability protection. There is no tax difference at all between an LLC and a sole proprietorship if you are the only owner of the LLC. And depending on what state you're in most states, LLCs are pretty affordable. You can usually form one for in the neighborhood of $125, and maybe you have $100 or $200 every few years to renew it. If you're in California or New York or Massachusetts, it's considerably more expensive, right? So definitely make sure the liability protection is worth it. But if you have employees, if you have a high level of personal assets, or if you just really want the separation, be an LLC.
I think for anybody whose eye is twitching at the thought of navigating the DMV online, there are also businesses that will do this for you, right? That will like set up your LLC and make sure that all the filings are correctly done. Which I know won't necessarily endorse one, but.
Right. Well, there is a free one, and there is a free one I will endorse. Pretty much certainly mid and major city has a group called the SBDC. That stands for Small Business Development Corporation. And SBDCs exist simply to help people with paperwork. They are magical. They are also fantastic resources in your community. Often they are at United Ways or community colleges or sometimes standalone entities, but they also do free workshops. They bring in lawyers. They often refer people to accountants or attorneys or other sort of community resources for small businesses, and they are free. Your LLC will still cost whatever it costs, but their services are totally free because they're part of the Small Business Administration. So if you are someone who works in isolation, right, or kind of lacks that business community, the SBDC meetups could be a really great way to kind of lean into that.
Cool. We have a lot of questions that have already come in. Do you mind if
I love the question. Keep them coming.
Maybe I'll say a couple of these, and because I think a couple of them kind of focus on similar questions. So the first one is just straight up about paperwork and bureaucracy. Kim Bentley asks, they just submitted their first BOI report. I would love for you to educate me on what a BOI report is. How often will I have to submit this report?
Kim, you are awesome. Congratulations on doing your BOI. Let us know in the chat how long it took, because my guess is it took you like 7 to 10 minutes to do. It's a pretty easy filing. It stands for Beneficial Ownership Information, BOI. And this is a new requirement for basically any small business entities. The requirement comes through a group called FinCEN, FINCEN. And I'm pretty sure, since Ian is so on top of the chat, it's fincen.gov/BOI. FinCEN stands for the Financial Crimes Enforcement Network. And starting this year, we decided to fight money laundering, which is a good and worthy goal. And the way they decided to do that is to ask every business owner to file a report that basically says who's the human behind your business. That is it at its sort of most basic, right? And it's very simple, but you do have to share your address. Yeah, lots of personal information about you. If you have an LLC or an S corporation that existed before this year, you have to file your first BOI before December 31st, right? So if you haven't done that, get on it. You've got a little bit of time. There's also legislation and hand wringing about whether it's going to get extended or not. Just do it right at this point. Let's just take care of it. And Kim, to very specifically answer your question, you need to update the form anytime the information changes. So that means anytime there's a change of ownership of your company. So let's pretend you're an S corporation and you have, 4 or 5 teachers that work for you, and one of them decides to become an owner. So that person buys ownership of your S corporation. That would be probably, depending on how much you give them, probably a beneficial ownership change. So you would need to file a new report. The other thing that might come up slightly sooner than that is that address that is on file. So if you move or if your business moves, you're going to want to update your BOI so that the information remains current. I believe the current statute says you have 30 days after those changes to file your BOI. It might be 90, but anytime information changes, you want to jump on updating it pretty quickly. Great question.
Can I add, she wrote in 7 minutes. She said it was super easy and she did it instead of paying her accountant. Now her accountant can do more complex things instead. Can we talk just for a second about privacy? So the whole notion of registering a business, but actually it's your living room, right? I think that's going to apply to a lot of the NATS members. Can you hide your address when you register your LLC? Like maybe you don't want your personal information out there in the world in searchable databases.
Yeah. No, it depends on the state, right? Depends on the state where you're filing, but no, not really, right? So if it is going to be your home address, right? Sometimes different states and territories might let you have a mailing address that's separate. You still have to report to them kind of your primary place of business, which might be your home. But many places will let you get either a PO box or pay for one of those sort of street addresses, or have something called a registered agent in the state. And then that registered agent would actually be the sort of, address on file. That's the best way to sort of mask it, if you will. But, the information is going to be out there. FinCEN swears the data will be protected and safe and not sort of, searchable by lots of people. But it is definitely something to be aware of. So, if you're thinking about forming an LLC, poke around on your Secretary of State's website and just see the information that is visible, because it'll probably say, depending on the state or territory, official address or mailing address. So, you can sort of do a little bit of digging, or talk to your friendly folks at the SBDC and ask sort of which address is going to be visible. So registered agent is your best option, or having sort of a publicly safe street address that is not your residence. Or you say, Google knows everything about me anyway, I don't care. And that's an okay choice to make.
I know, even to register a domain at this point for a website, you have to make that privacy decision. Like, are you going to pay the extra $10 a year or whatever it is to like have all of that stuff hidden, or are you just not going to care? Because that you just go to Whois and like you can figure out where people live based on their website. Okay, great. We have
terrifying.
It's still a little bit terrifying. We have two other great questions. I'm gonna lead with the more complex one, but maybe this would be a good way to talk about what it is to have an S Corp versus an LLC, or at what point does the scale of your business warrant a different tax structure? Caitlin 𝘕𝘈𝘛𝘚 asks, can you explain more about K1s for LLCs with multiple member managers? She gives an example. She says her husband and she are both member managers and are married filing jointly. I hate taxonomy, so those were both probably complex things that I just said, right? So married filing jointly, that's like how they're doing their taxes. And then member managers is what their role is within their LLC, right? Would it be wiser to remove him as a member manager from the LLC, or does it have no effect since they file taxes together anyway?
My guess, Caitlin, is that it probably wouldn't matter. I would say it's not usually a good idea to let taxes drive business decisions, or marital ones for that matter, right? So I would say, think about you and your husband and how you run the business. Now, if he's a member manager kind of in name only, I would probably remove him then if you really are the legit member manager and the only person sort of running the business. If it is legitimately kind of a joint business owned by both of you, I would keep you both as multi-member owners of the LLC. That feels really good and appropriate given kind of the tax structure. And like you said, everything is going to flow through to your personal tax return, right? So it probably isn't going to make any sort of difference at all. What could make a difference is if you become an S corporation, because then you could pay yourselves a salary from the business, and then you have the self-employment taxes on the salary portion, not the whole bit. So if you jointly are in a relatively high tax bracket, it might be nice to work with a CPA probably just to game out what an S corporation would save you in taxes. Generally, an S corporation will cost you about an extra $1,200 a year. And so what we want to look for is the taxes that you're saving need to more than justify the cost of it. The rough benchmark is between $100,000 and $125,000 of revenue starts to put you in that world where S corporation might save you some real tax dollars, but that's not a magic number, right? Each situation is different. The other thing, Caitlin, I would think about, not knowing where you are based. If a husband and wife own an LLC jointly in a community property state, then it can be filed as essentially a disregarded entity. I have no idea if you live in one of those, and I can't remember all of them off the top of my head anyway, but that's another sort of potential thing to think about it.
Can you define the words that you just said?
Oh yeah, a community property state is like a legal concept where each spouse is deemed to own 50% of all the marital assets. Community property state. That counts businesses that you jointly own together, regardless of the structure. So that's why if you're in a community property state, you can treat a multi-member LLC as essentially a single member LLC because there's one marital unit owning it.
Very cool. Yeah, I like that actually as a rule of thumb, what you said. It's like, don't try to think about how to game the system, just like ask yourself, how are you structured? And set up your business so that it reflects how you're actually structured. Theodora
Yeah.
had some good questions, and then I'd love to start talking about some of these other things that we have on our list. So Theodora Nestorova has a question about what is the best way to pay yourself and your personal expenses with income that goes into your business account, assuming you have a single member LLC. And I gather from her follow-up comments that she's currently doing, I'm not sure how periodic it is, Theodora, but she's doing an owner draw periodically. And so I suspect just having business income come into the business and then taking out money at whatever rate she does. She also asks about what implications there are if you offer services and work with people internationally, as well as within, if your clients are within the United States. And does that affect like what state or territory you would incorporate in?
Yes, I love it. These questions are so good. Ian, we should throw out everything we talked about and
Excellent.
just do these questions.
It's done,
and actually, Theodora, yeah, I think maybe number 8 on our list really closely ties to the first question you asked. I'm going to come back to the multiple states and then countries in a second.
Great.
But the short answer is yes. The best way to pay yourself is through an owner's draw if you are a single member LLC or a sole proprietor, by the way, right? And so in terms of cash flow, my dream scenario is all the business income goes into some sort of separate business bank account, right? So that means, Stripe goes there, Venmo goes there, whatever, however you take money, QuickBooks is tied to there, right? Whatever you do, that money goes into the business bank account. And then, dream scenario, you have some sort of idea of how many expenses you're going to have during whatever period we're looking at, right? So obviously we leave enough in the account to cover those expenses. And then this is where like the forecasting, budgeting, planning side can get really exciting. You basically say, okay, I'm going to make up numbers for you. So Theodora, let's say you bring in $10,000 a month in income from students. And let's say you have $2,500 worth of expenses every month. Your business income into your LLC bank account is $10,000. Then you spend $2,500 of it. You have $7,500 left. Maybe you decide, just as a business owner, I am always going to leave $500 in the account every month just because. I'm making this up. You can do whatever number you want, right? So now we're down to like 7,000 that you're playing with because you're going to leave 500 just to sort of be the cushion, reinvestment, whatever, right? So now of that 7,000, we have a choice. How much are you going to pay yourself versus set aside for taxes, right? Yeah. So you could pay yourself the whole 7,000. That's totally fine. You can do an owner's draw of 7,000, move it into your personal bank account. And then I would take probably 30% of that 7,000 and I would move it into a tax account. Or if you are a natural saver, I would just move it into a savings account so you don't spend it. But that basically means 30% of 7,000 is, I think, $2,100-ish. So that would give you whatever's left, $4,900 to spend on your life as a human, right? Groceries, rent, social outings, personal travel, but all of that spending is coming from your personal bank account. And then where this gets really interesting is you can say, I want to reinvest more in my business because I want a new website next year. So I could set aside more, which means you're paying yourself a little less. Or you could say, I can't live on $4,900 a month. And then I would say, okay, how many more students do you need to math back into whatever amount you do need to pay yourself and cover your expenses and pay your taxes, right? And then all of a sudden we have the foundations of sort of a forward-looking business strategy, right? And that starts to feel really empowering.
I love that because it presumes success, that we're going to have to like plan for these problems to arise. This might be worth pointing out too, because I suspect probably there are still people who don't, they can't intuit the difference between a sole proprietorship and an LLC and an S Corp. If you're sole proprietor or LLC, when the money comes into your business account, that's the taxable event, right? And if you're running an S Corp and you're paying yourself a salary, then essentially you would pay taxes on the salary that you are paying yourself. And so that probably,
and whatever's left.
and whatever's left. Exactly right.
Yeah.
So maybe maybe that's an interesting entree into the question of like how to think through tax deduction, what's tax deductible for tax purposes. I remember, being an undergraduate in college, and all of the professors were like, make sure you spend a ton of money on something every year so you can write everything off. And like, it took me a while to realize, like, well, actually, even if you pay taxes on money, sometimes it's better to just have the money. So like, I'm just curious, philosophically, maybe we could go into that next. Just a couple quick comments. So Caitlin says, thank you, that was very helpful. She was the one with the husband and the multi-member. She says that she's in Arizona, which is a community property state. So it sounds like maybe that'll help make that decision. This is, I guess, before we move off from business structures, Tony Travis has a great question. They say, are there any suggestions to look out for when establishing a business, so a vocal studio or performing group, something that you incorporate, you establish, with a person that you are not legally tied to in marriage? So somebody like a friend or a colleague. So I guess maybe this cuts to what is equitable, but also what shields you from legal issues down the road.
Totally. And for what it's worth, I would do this if you were married to your business partner too. I know it's perhaps less sexy, but it's still really important, right? Get really clear with each other on what the business is, who's doing what, who has contributed different assets like stuff, equipment, subscriptions or expertise or time to sort of build up something, right? So get really clear with what each person has contributed and will contribute over time, and then be really clear with how income is going to be distributed. I should probably say net income is going to be distributed. Is it 50-50 always? Is it 70-30 always? Is it based on how much time each person puts into the year? Is it based on how much revenue each person brings in during the year, right? There are different ways to do it, but you want to be super clear with how each person expects they are going to get their share of the net income. And then, even though we never plan for businesses to dissolve, we want to have an idea of what's going to happen if the business dissolves, right? And so common provisions, and this is a really good time, by the way, to lean into maybe a favorite attorney friend or something just as you're drawing up essentially a business agreement, right? Could be part of the formation document, or it could just be a slightly less formal agreement among colleagues, friends, etc., right? What's going to happen when the business goes away? And so common things, noting that I am not a lawyer, usually the other person has the right to buy the business first, right? So if you and your best friend are going to start a vocal studio and your best friend wants to sell it, her share, to your mortal enemy, that feels not nice, right? So wouldn't it be nice if there was some provision requiring her to sell it to you first? There can also be sort of reasonable approval of who the sale is going to if you're not in a position to buy her out, right? Or if we're going to just shut everything down, who gets what? Who gets the students? Who gets the licenses? Who gets the intellectual property of that great course you created together, right? We don't plan for things to fail, and it's really smart, just while everyone is still on speaking terms, to just hash out what that would hypothetically look like. And then you have some sort of like annual meetup with your friend, right? Where you review and you say like, okay, how are things going? What are our goals? Does all of this still feel good and equitable and accurate to us, right? Businesses have annual meetings to do that all the time. You and your friend should do that over a deductible business meal, right? To kind of lean in and just check in with each other, right? That feels normal, appropriate, ordinary, necessary, all of those things.
Very cool. That's great. I have a question that this is perhaps the most intricate, so I'll try to read it slowly for myself. We have somebody, this is a great story. This is somebody doing very well. They have a great problem to share with you. So they say that they're doing about 350,000 a year in revenue as a single member LLC taxed as an S Corp. They pay themselves a reasonable salary and distributions every month. They say they use a 60-40 approach. So maybe if you know what that means, you can unpack that for us. They say their teenager also works for them as an employee on salary, and they have 2 additional independent contractors. Their business makes charitable contributions, and they contribute to SEP IRAs for all of their employees. This is a question now, what other investment accounts can the business contribute to that would be tax deductible on the form 1120S, which I assume is the filing form for an S Corp?
Yes, exactly. Oh, Catherine, you are doing everything right, and it makes me so excited. This is not going to help your 1120S, but since your kiddo works for you and now has earned income, and depending on how much you pay them, that might not be taxed because they're maybe under that sort of standard deduction for single filers, right? Or even if they're taxed, it's going to be really low unless your kiddo is making bank, right?
Right.
Because they have earned income. What a good time to have your kiddo contribute some of that earned income, or you on their behalf, to a Roth IRA, right? Because as long as you have earned income, you can contribute to a Roth IRA. That money is taxed, right? And if you're at a 0% tax rate, you're paying 0% taxes, and then your kiddo gets to save it for like 40, 50, 60 years, which is magical. So that doesn't help your 1120S or even your personal tax return, right? But I really like that as a strategy for your kiddo, right? So that's my first thought.
They did follow up that they're currently maxing out Roth IRAs. And
Yes.
and they've also been contributing to a 529 college savings plan.
Okay. HSA, health savings account, that tends to be on the Schedule 1, your personal tax return. Maybe you could do it through the S Corp if you had a high deductible plan for your people. I don't know. Certainly like key employee compensation healthcare, so that would be you, right? Some of that we can move into the S corporation. HSA for yourself definitely would help. Again, you have to have a high deductible healthcare plan, and that isn't an option for everyone. And the HSA contribution isn't huge. It might be like $2,500 or $3,500. It's not huge, but it's not use it or lose it money. It is money that you then invest, and then it's tax-free as long as you take distributions for qualified medical expenses whenever they happen. So that feels like an option. Healthcare within the S corporation feels good and appropriate, certainly for you as the owner. I think that's interesting. I think, if, I don't know how you feel about this or if it's accurate, but your independent contractors becoming employees, then you might have some sort of fringe benefits that they could be eligible for. Parking comes to mind, certainly professional development and things like that. You can still pay for all of that for independent contractors, but it makes them start to feel a little bit more like employees. So those off the top of my head are there. I assume, although correct me if I'm wrong, that you're clearly already getting really good advice. So I imagine you're paying rent on a property, or you have like a building on your home property, and so you're maximizing sort of any. S corporations can't exactly do business use of the home, but we can sort of do rent and things like that. The S corporation could buy a vehicle. There's some good depreciation benefits going on right now, where you can essentially accelerate the depreciation. That means take it all in 1 year. Don't buy like a cyber truck, but if it's like a reasonable vehicle, there are nice things you could do there. So that could be an option. That's what all I got off the top of my head, though. You're already kind of doing all the low-hanging fruit and even the sort of mid-level fruit. So that all feels really, really good, Catherine.
That's great. Maybe we all have such problems. But maybe let's kind of zoom back out to what it's like for somebody who's maybe transitioning from either maybe having a salary job at some other place. They're kind of going out on their own. They're just getting started. And so I remember when I opened my LLC, the amount of time it took me to organize my tech stack was like not a small amount of time. And then once you get all these various services and things connected, it starts humming along on its own, and it can be great. But I think there was a heavier lift than I think I would intuited there probably would be. So I'm wondering, can we talk about just like some basic things, like not what is tax deductible, but like how to keep track of deductions? What is deductible? Like, how do you decide like QuickBooks, like the energy that it takes to activate getting going with QuickBooks Online, that's worth it? How do you think about payment gateways and what are the tax implications of those? Just sort of the like, I'm getting started with this. What sort of things do you think about?
Yes. Also really great questions. It feels almost like the theme of tonight is like, let's not let taxes drive business decisions. And that is true for your systems as well, your tech stack. I love that phrase you used, Ian. So, let's not let sort of the perfect elusive system drive things. Let's start with you. How do you work best? And if it is an Excel sheet or a Google sheet and, some Zen time by yourself every month as you enter everything and a big envelope full of receipts, that is 100% fine. That meets the definition of what the IRS requires, which is any system suited to your needs that shows your income and expenses, right? So that totally meets that. I think you can, if you're good at Excel or Google Sheets, or even like moderately dangerously good, it's a really powerful tool, and you can import data and you can do a lot of fancy formulas, and you can do really robust financial modeling and planning in Excel or Google Sheets. And it takes some time to build up that expertise if you don't already have it. And Google Sheets can't send invoices for you. So the time that people usually outgrow, or shouldn't even say outgrow, but Google Sheets or Excel stops meeting their needs is when they need to be sending invoices or they are looking for some efficiency built into the system, right? And so that's when we would look at Wave or QuickBooks or Xero, spelled with an X, Xero, or FreshBooks. Those tend to be the most common sort of small and mid-sized business accounting softwares. But also something like My Music Staff will do some of your invoicing and tracking for you, right? So if you could have a client management portal that also tracks your money, dream scenario, right? As long as it's all kind of working for you. Now, all those systems I mentioned are like business systems. If you are someone who is maybe teaching a little bit, or maybe you're adjuncting or lecturing, and you're doing a lot of different things, and you're like, Elaine, A, I don't have an LLC, and B, I don't even have a second bank account. Everything goes into one place because I'm figuring things out. I would say amazing. There are tools for that too. Again, Excel or Google Sheets, magical. Within your bank, right, or credit union, whatever financial institution you have, there's probably a pretty robust website and app. Might not be super pretty, right? But they are probably categorizing your income and expenses for you and taking guesses about what you're spending money on. If you spend some time modifying those categories and kind of staying on top of them, at the end of the year, you have a report for yourself that basically shows everything, which is pretty cool, right? The other thing you could look at, Rocket Money and Simplify spelled with all I's, are both really good personal financial tracking options. If you loved Mint, they are no longer in existence in the way they used to be, which you probably know, right? And a lot of Mint users have migrated towards Simplify. It's not free. I think it's $4 or $5 a month-ish. It doesn't always connect really nicely to business bank accounts either, unless you get the like business Simplify version, right? So those are some potential drawbacks, but they're really good options. You control the categories. I like them in terms of just sort of ongoing monitoring. With Rocket Money as well, personally, I would not pay for it. There's a free version. The paid version looks for subscriptions and unsubscribes you. You can also just do that, right? So I would not pay them to do that for you, certainly not on an ongoing basis. So that's kind of where I land on that. But I will also say sometimes those systems give you a lot of alerts, and sometimes people love that, and sometimes that is anxiety producing. Yeah. So yet again, you know yourself best. So choose how you want to work and then go from there. For those of you who are like a little bit more sophisticated too, I'll throw out one more. It's called Empower. Used to be called Personal Capital. Now it's called Empower. It works in a very similar way, pulls in all your data. It has a really robust investment platform too. So like, I think it maybe was it Catherine who had 529s and SEPs and IRAs and all sorts of other things, right? All of those balances you can look at in one place, even if you're managing them at a bunch of different institutions. So it can be really, it's kind of like working with a software financial planner, which can be really nice.
Yeah, it seems like the one truth that has seemed to be true my entire career is at all times, you either have more time or more money. And like whichever you have more of, that's what you end up spending. So there was a time in my life when it wasn't even an Excel spreadsheet, it was a physical ledger that I carried around. And then at this point, like having everything in QuickBooks Online means there's a button you press and your accountant can just access it all, right? And so you don't even have to be transferring stuff over to them. That is wonderful. I wonder, and this maybe is a little bit of a niche question, but this is something a lot of my colleagues have crossed over this threshold where it makes sense to pay a bookkeeper. And I wonder, is there a quick rule of thumb, sort of like, don't get an S Corp until you make 100 grand, right? Is there a rule of thumb as to when it makes sense to pay a monthly fee to a bookkeeper?
I think when your time is best spent doing something else. That is the benchmark or the truism, right? So I would say, maybe if you're finding, the math way of doing that is if you are finding you're spending 4 hours a month that you could otherwise be teaching or doing lesson development or gigging, and you're turning down work because you're doing administrative tasks, outsource the administrative tasks, and bookkeeping is one of the easiest ones to outsource. So that feels like a really clear math moment when it makes sense. The other time is when like you just hate it, right? It's just not a productive use of your time, right? Emotionally, mentally, whatever, right? It might then make a lot of sense if you have the resources to hire a bookkeeper. You can certainly hire one through QuickBooks or Wave or whatever platform you're using. You can also hire a local person that could also foster like a really nice kind of community connection benefit. If you're comfortable with it, there are also a bunch of remote bookkeeping companies that will work at really affordable rates. So you've got a lot of options there. And I would just say, make sure the math makes sense for you, both in terms of your time and your money.
Excellent, excellent. Great. So thinking about payment gateways, there was something specific I wanted to ask, only because it seems to have come up this year. This was a big topic of conversation in various Facebook discussion groups that like a lot of NATS members are a part of. And it was, why are my students' parents 1099ing me for these lessons that I'm teaching? And so I should say out of the gate, if somebody doesn't 1099 you, NATS does not endorse failing to report that income, right? You should report every penny, because anybody who's young and listening to this, 10 years from now, you want tax records that show you had income so that you can get a mortgage, right? So setting that aside, right, like what are the actual boundaries in terms of what counts as being an independent contractor versus just you have a business and are providing a service? I wouldn't 1099 my tailor, right? That would be ridiculous.
Right.
So I would love for you to talk on that, because I know a lot of people have been wondering about this.
Yes, it's such a fascinating question, right? So if you get 1099s, amazing, right? It shouldn't really impact your records at all, right? Other than to double check and make sure it's accurate. If it's not accurate, then you follow up, right? It's weird that sort of parents would think of you as an independent contractor as opposed to a business who is sort of invoicing them. So my default or preference is always that you are just a business who's invoicing and, you know, kind of keeping track of all of your income from whatever source is derived, right?
Yeah.
Because that's just kind of what you do. But if you receive 1099s, amazing, double check it with your records, right? And then make sure it's accurate. But you know, generally, I would imagine people are sending a 1099 because they want to make sure they are documenting their business deduction.
Yeah.
But honestly, let's pretend, I don't know that a parent could do it unless the kiddo had the kiddo's business, right? But let's pretend a kiddo has a business and is hiring sort of experts, right? That's a business deduction, whether or not they send a 1099, right? So I think it probably just boils down to a lot of confusion around the rules and people trying to comply and not always being fully accurate. But yes, report all income from whatever source is derived, and make sure you, the business owner, are keeping track of everything, not relying on other people to tell you what they paid you.
Amen. Amen. I wonder if you could talk a little bit about forecasting tools. I remember, and this is going to date me, but I remember using Microsoft Money, which is like 25 years old. It was destroyed 25 years ago. But it had the most elegant cash forecasting tool that was available to consumers at that time. And when I switched to Quicken, it was actually a pretty big drop in that functionality. I know if somebody gets into QuickBooks, great, it has a pretty robust forecasting tool, right? But let's say we're not that person, right? We're somebody who, just like Theodora's question earlier, it's like, how do you figure out how much the owner's draw is and what the period of that is? How can you look into the future and understand where the finances of your business are going to be?
Yeah, well, and especially in the arts, when there are seasonal fluctuations, maybe cash flow fluctuations. Some folks bill students quarterly or maybe on a semester basis, right? And then you have a whole lot of cash and then no new money coming in for several months, right?
Yeah.
So there are a lot of nuances. I know, Ian, you might not like this question or this answer because, you know, you're about the tech stack, but I would do it in Excel or Google Sheets. Even the systems that exist, they tend to try to make rules like, you made this much this month, that means you're going to make that much for the rest of time, right?
Yeah.
And I have never met any creative person whose life looks like that, right? So my favorite way to forecast, blank sheet of paper or a Google sheet, right? And step one is list all of the ways you make money in business words, right? So students, gigs, classes, master classes, honorariums, residencies, you know, grants, fellowships, whatever they are. List the ways you make money in business words. And if you already have QuickBooks or Wave or any system, you already know these words, right? So list them out in business words. And then across your columns, title them with whatever time period you want to look at, right? Some people like monthly, right? If you've been doing this a minute and you have a pretty good sense of what generally happens, do a monthly forecast. If you're newer or, you know, your life is weird, go with quarterly, right? You don't have to be bound by any sort of absolute temporal sort of, you know, limits. You can do whatever works for you, right? And then you just do the math, right? So you've got your business words, you've got your time, you look at your calendar and you say, oh, I have this student that's going to be away in August. I'm going to do the math and take away their income from that August line or something. Or if you're not doing it student by student, maybe you say, you know what, on average, half of my students always go on vacation in August. So I'm going to count on half the income that month. And then you basically just look forward whatever time period you're comfortable with, right? I would look very detailed for like a 3 to 6 month period because you can usually know what's coming then. And then I would look still forward, but maybe in a little bit less detail for, you know, 6 to 12, maybe even to 18 months, just so you can be looking forward, right? If you are also planning sort of master classes and tours and things like that further out, don't let me stop you. You can go further out, right? But realistically, the forecast is going to get better as you get closer and closer to it. So I have one person who forecasts that way and then updates it with actual results. That's like her bookkeeping system. I have another person who forecasts and then prints off actuals in QuickBooks. I'm pretty sure she uses QuickBooks, right? And then she just compares, right? So you're looking at Excel and you're looking at QuickBooks, but if you're using the same words, right, your brain can handle that, right? So that is pretty nice. And then in Google Sheets, you can make all sorts of graphs and charts, and you can make it really fantastic.
It sounds like if one has a love for that sort of thing, that it would be easy to be motivated to have multiple places where you have to keep coming back and making sure it's updated and making sure it's updated.
Yeah. Or could I reframe just a smidge on what you just said? Because you're totally right. If you have a love of that, if you have like a strategic brain or you get really into the weeds, that's going to be probably something you're already doing. But what if you just have a love of having the life you want, right? And maybe for you, the life you want is, you know, no more than 10 students a week so that you can do whatever else you want to do, right? All of a sudden then, we can use the forecast as sort of a model for, okay, this is going to work. I'm going to hit my 4,900 or whatever that number we did with Theodora was earlier, right? I'm going to hit it in every month except for October. Okay, so what am I going to do in October? Am I going to draw money from investments I've been saving? Am I going to pick up a couple of extra performance gigs at, you know, some sort of wedding venue or something? Am I going to, you know, fill in the blank something else, right? It starts to be a tool to basically say, here's what I want. Am I there? Or what steps can I take to get there? Which I think is a more powerful motivator than here's a strategic business task that you should be doing, right?
Right. Yeah. Or maybe that tells you that $4,900 a month is actually $5,500 for 11 months, right?
Totally. Yeah. And that works too. Yeah.
Yeah. Great. Can we have a good question from Josie Alexander, and I think this dovetails nicely into the broader question of like, what actually is tax deductible, right? And how can you intelligently spend money so that you're tax advantaged when you do spend it? So the question is, should you hold 30% back for taxes, which that's a good amount. I think I hit around 25% most years. Should you hold back 30% for taxes before your expenses? So is that on your gross, or after you've calculated all of your expenses? Is that on your net?
Josie, this is a great question. If you want the math to be really right, do it on the net, right? And that's because if you are a sole proprietor or a single member LLC, right, you have business income minus business expenses. That net amount first is subject to self-employment tax. That's 15.3%. That's your Social Security and your Medicare contribution. And then that amount flows to your main tax return, regardless of whether you're single or head of household or married, right? And gets added to any other income. And then it's subject to federal income taxes. Those range from 0 to 10, 12, 22, 24, 32, and then maybe 37%, right? But they go up, right?
Yep.
But you're only taxed on taxable income. So you get a standard deduction. If you're contributing to retirement, that is a allowed tax deduction, right? That reduces your taxable income. So the math gets really fuzzy, but we say 30% of your net business income, because that's generally enough for most folks to cover that self-employment tax piece, and then also federal, state, and local taxes ish with all those adjustments. If you're in California, I might nudge it to 35. If your income is substantially higher, I might also nudge it to about 35%, just sort of to be safe and secure. So that's kind of where we get that 30%. Now, I will tell you, as a studier of humans, we're not always really good at saving that 30% when it's a hypothetical future thing we're going to pay.
Yeah.
So if you know yourself and know that you never have enough left for taxes, and then that's very stress producing, right? Because if you have money, you're going to spend it. I would set aside 30% when you get the money. Now, that's going to be more than you need, but I don't hate that as a strategy either, because then you can throw some into an IRA or it's an emergency reserve, right? I don't hate that as a strategy. And if your income is all over the place, right, it might be easier anytime you get income simply to transfer some to a tax savings account. Now,
Yeah.
the math won't be exactly right, but I don't hate that just from a human habit perspective. I hope that helps, Josie.
Yeah, it certainly errs in the direction of you have more money to pay your taxes with rather than you run out of money. I wonder, sort of sticking on that question, if you're running an LLC or an S Corp or even sole proprietorship, there's an expectation you'll be paying taxes quarterly. But what if you don't? Like really, how bad is it? What are the penalties like?
Oh, they're super small, right? It's something like less than 1%, right, of what you end up owing. And in fact, especially for a lot of small sole proprietors or smaller LLCs, they just don't even worry about it. They're like, you know, I'd rather just pay the penalty. And I have no problem with that as long as it's an intentional choice. However, again, the penalty on top of the taxes, right? It does really start to add up. And there is a really nice, lovely professionalism about looking at your numbers at least quarterly, gut checking that tax number, making that payment, right? That starts to feel just like a nice seasonal rhythm for you to lean into when it comes to your business. So personally, I certainly pay quarterly taxes. I actually prepay them, right? So I actually pay them a year in advance just because I don't like to worry about it or think about it, right? And that's an okay thing to do too, right? I know people will tell you it's a tax-free loan to an interest-free loan to the government, and you're losing out on the 4% you could have if you invested it in a high-yield savings account, all of which is true. And my goodness, not worrying about it just makes me sleep better at night. So you get to make informed choices about what you do, right? But there's definitely a nice rhythm to it. And definitely, you know, if you haven't done it, if it doesn't work out, it's going to be fine. Because also sort of connecting back to Josie's point, right? Let's pretend you are married filing jointly with a spouse. Your spouse has a W-2 job and your spouse is over withholding at their job, right? Or maybe you have a couple of different W-2 jobs, either through, you know, union or equity-based contract type things you may have, or maybe you're teaching at an institution and paid as an employee. You can also over withhold on those jobs. Right. And then essentially you're paying your taxes from that paycheck, and it all goes into the same pot, right? To suss out what you actually end up owing at the end of the year. And if you owe less than $1,000, not in total, but in terms of the check you have to write to the government in April or March or whenever you file, then there's no penalty, right? So, you know, there are different strategic ways where it might make sense to not file quarterly, you know, if you know your math is going to work out.
Yeah, like if paying for the parking ticket is cheaper than the parking garage, like at a certain point, like you just yes. Pay for the parking
not ticket. A deductible expense, by the way.
Oh, excellent. Good. Kari, I'm going to take guest host prerogative if it's okay and go just like 2 minutes over. I would love to ask two quick little questions to sort of tie everything up. One of them surrounds pricing. Pricing for voice teachers can be a very actually emotionally burdened thing to do because we all remember being younger singers without funds and how expensive voice lessons were. But at the same time, if you price yourself into poverty, you're not going to be a great mentor for anybody, right? So there's a good deal of tension. I think many people approach this by imagining, well, how much does my teacher charge? And I'm not as good as them, so clearly I should just do half of them, right? So we're not going to solve that problem tonight. The question I'd like to ask is, let's say we decide my time is worth $120, right? That's what I would like to get. But if we're just getting that cash and we're not getting it as part of a salary, clearly there needs to be some percentage overhead that we top onto that. So I would love for you to just briefly talk about whatever the number is. What is the overhead percentage that we should all be keeping in mind to cover not just taxes, but like all the other things we should be doing, retirement accounts, kids' college accounts, all of that stuff. And that also ties into the question of like, what are the best practices for when it makes sense to reinvest in your business versus just thinking of the business as a pass-through entity?
Yes. Oh my gosh, such good stuff. The overhead percentage, 100% depends on your own business. Now, as a voice teacher, right, you have some expenses. You've got some subscriptions, you've got some software products you're using, you probably have some licenses. If you're running recitals, you probably have some event-like expenses, you might have some advertising, right? But you're not making a product that has a direct supplies and materials cost in it. So the service-like business tends to have a smaller overhead percentage than a product-based business, right? Especially a digital product if you're making or selling any of those, right? So look at your own numbers and see what your own overhead percentage is, right? And then back into kind of, again, the revenue you want to get there. I would say 20% is not a terrible estimate. I am also a service-based business. My overhead percentage is a little bit higher for a long list of reasons that you do not care about, right? But I usually plan on about 30 to 35% of my revenue going to my expenses, right? Because I just know that's probably about where it's going to land, and that is perfectly fine. And then I always love to save between 5 and 10% of my income in the business, right? And then when I distribute to myself, I always try to save 10 to 20% for myself in a mixture of retirement or emergency funds or short-term funds or just regular old investments, right? That's a high percentage. If you were keeping track of it, I'm saving almost 25%-ish of what I'm bringing in just for savings, right? It, again, helps me sleep at night. It brings me comfort. That is a high percentage. The rough estimates most financial planners will tell you is between 10 and 20% in a mix of short-term and long-term, and that will generally put you in a pretty good position. I also work with a whole lot of folks who are like, Elaine, like 1% is a really stretch goal for me. And I'm like, that's amazing. You know, all savings is good savings. And we all have different life circumstances that put us in a place that enable us to save or not save based on a whole lot of different choices, right? All savings is good savings. General expert advice says between 10 and 20%. You get to decide the number that brings you comfort. And then if we, as we've also said, 30% starts to feel like a good number for taxes to set aside. But again, you can look at your own real system numbers and see what works.
Do you, maybe as a parting thought, that I'm struck how many great questions there were that came in, and some that were just really detailed, and some of these questions were more like, broadly speaking, how should I even be thinking about this? And it seems like people are hungry for community on questions like this. And I'm just curious. So like in a profession where many of us see the inside of our studio and whatever client comes into the space, but that's kind of it. What do you suggest for community building, like specifically around these questions of how it is to better run your business? Like not just answer getting, but like-minded individual collaboration.
Totally, because it can be really, really lonely for sure, right? I would say everyone here is already plugged into NATS, which is such a fantastic community of support. So maybe there's a micro group that emerges of sort of almost like a mastermind kind of group, right? You can Google mastermind if that's not a concept that's familiar to you, but it's basically like similar types of business owners getting together, usually monthly. And my favorite way to structure them is everybody comes and they share quickly, right? So no diatribes, but they share quickly one thing that's going well, one thing they want to work on, and then you spend the rest of like the 45 minutes working on what people want to work on. And then there's some accountability there, right? And it's like-minded individuals. So a mastermind group can be really effective. And if there are those within NATS, or maybe there's a hunger for them, so something like that can emerge, that feels really good because you're already part of this existing community. I would say you can also sort of form your own peer accountability groups. I love those. It's a lot of emotional labor to like organize them though, and none of you have emotional labor to spare, I imagine. So having somebody else facilitate it starts to feel really good. But also, don't forget, well, certainly sort of peers, mentors, sort of, you know, those, make sure you're keeping those relationships warm, right? Especially when you're feeling lonely. But then also Don't sleep on the non-voice teacher members of your community that you probably need, right? So I'm thinking about your banker or your accountant or your attorney or the Chamber of Commerce or the Small Business Development Center group,
Yeah.
or maybe there's a, young entrepreneurs club, or maybe if you're closer to my age, maybe there's a not so young entrepreneurs club in your town that you can meet, right? So find those other groups so that your network includes peers, other voice teachers, and also an attorney you can call with a quickie question that you don't want to be billed for, right? All of them need to be part of your community in a way that really does support you.
And then the attorney can call you when they have a voice teacher question that they don't want to pay somebody for.
Yes. 100%.
Jacqueline Culpepper just gave a great question. I have to ask this to you, and then we will wrap up, I promise. Maybe not specifically asking, Dr. Luttrull, can you please give us a complete list of everything that I might deduct for my business from my taxes? What resources exist that might give somebody, so rather than like the paralysis of looking at a blank spreadsheet, right? Like, what is a pre-populated list of, here are common expenses for a service-oriented business, so that we can start thinking about what of our outflows might actually be tax deductible?
Yeah. Oh my gosh, this really is a fantastic question. And beyond just sort of, Google it or ask ChatGPT, I would love to share specifically, Jacqueline, the general rule is that expenses that are ordinary and necessary and effectively connected to your trade or business are deductible. So there are exceptions, of course, but that's the general rule. So as you go through your life and your business, anytime you're spending money that feels ordinary, which means common and accepted in your industry of vocal arts teachers, right? Necessary, which means helpful and appropriate to your business, and then effectively connected to your business, right? So turns out Ian and I are practically neighbors. We only live like 3 hours apart from each other, right? So if we were to get together and I were to buy Ian dinner and I would say, hey, can you share some feedback from the NATS chat? That feels like a meal that's effectively connected to my business of being a financial educator, right? There is that business purpose there. If Ian and I are just friends, right, that feels like a friend dinner, right? And so it becomes a judgment call about how effectively connected to the trade or business does it feel, right? And so I would say, don't go to jail, use your best judgment and feel like you're on the right side of karma, right? Because you have to explain with a straight face if someone from a taxing authority asks why that was a business expense, right? And so the sort of hot issues or the areas that are often scrutinized are certainly meals. And there's a fun fact about meals, they are only 50% deductible, 50%. Why? Because the IRS doesn't want to incentivize you to have every meeting over a meal, right? I get it. 50% deductible for meals, right? Research is an area that is scrutinized, right? You all are vocal arts instructors, right? So could I come up with a business case for you to very easily deduct Spotify? Absolutely. Or whatever your streaming platform of choice is, right? Absolutely. Why? Because you're listening to a repertoire, you're building things for your students, you're, in that world, right? And is every moment you spend on Spotify business related? Probably not. Maybe it is, right? But probably not. You also probably have like a secret K-pop habit that, you fuel every now and then, right? Or like some workout playlist or something. I know, I'm sorry, Ian. I didn't mean to out you there, right? But then at the end of the year with your wrapped list, you could say, okay, 80% of this is business related. I'm going to deduct 80% of my Spotify subscription, right? You're using your best reasonable judgment to identify the portions of expenses that are ordinary, necessary, and effectively connected to your trade or business, while noting that it is completely reasonable to have 100% of Spotify be business related. And I'm not saying don't do that. I'm just saying be kind of honest with yourself. Other research tends to be scrutinized for performing artists or anyone in the arts. That typically looks like going to events, right? So if it's date night with your partner, that's probably not a business expense, right? If your partner is also in the industry, even more scrutiny will come, right? So be reasonable about why were tickets to that particular performance connected to your business? Were you thinking about doing a recital there? Did you want to work with that producer? Was the repertoire something really interesting for a handful of your students? Were your students there and you wanted to make sure to connect with them? All of those are reasonable business reasons for attending something, but I just like it because I'm in the industry, doesn't really rise to the level of effectively connected to the trade or business. But I will say there are exceptions, right? Rick Steves, the travel writer, deducts every travel, right? Just Rick Steve is at a level where the income is high enough that everything is just deducted as a business expense. And that starts to feel reasonable, right? So if you are bringing in $3,000 or $4,000 from your teaching business and also deducting $3,000 or $4,000 of tickets to shows, that doesn't really feel reasonable. And so I wish there were more like absolute rules I could give you, Jacqueline, but always come back to ordinary, necessary, effectively connected to your trade or business, and then watch for any expense that is bifurcated between personal use and business use. So cell phone, any home expenses, you know, any subscriptions that might be part business and part personal. Watch for like research that doesn't really feel like legitimate research. And then anytime you're traveling, meaning you're away from your tax home for a period of time, make sure the primary purpose of the trip is business related. Then you're on solid ground for deducting to and from travel and lodging while you are there for that business purpose. So I hope that's helpful. You can also Google general lists. I've got a couple available, right? There are some really good options, but it's also just kind of experience. There's also publication 583 from the IRS. I'm pretty sure it's called Starting a Business and Keeping Records, and they have a lot of discussions about business expenses. I will say though, the arts businesses in general are nuanced. And so, you know, you might not be satisfied by sort of general conversations from the IRS, but it's a really good starting point. I hope that helps.
Like deductions are a little bit more poetry and perhaps a little less prose in terms of making the argument for it. Yes. I do like that you dropped the word helpful. It has to be helpful and relevant to your business. I think many people are afraid that the thing they want to deduct won't be taken seriously. So I think that that's a good internal razor. That's a good test, perhaps.
Yeah.
Okay.
If you don't mind, Ian, I'm going to add one thought to that. There's a lot of good reasons why we think we might not be taken seriously in the arts, because our businesses are fun, and you know, it's like, oh, it's like what other people do is hobbies, right? And so that reaction, I think, is very normal and very natural. And if I could invite you to extend a little bit of grace to the potential non-creative person who might be just not really clear on why whatever that expense is actually helpful for your business. If you can see it as an invitation to help them understand what it's like to run your business from where you're sitting with grace, that will often get you to a place where they're like, oh yeah, that makes total sense. And then it's over, right? Now, I know how hard it is to extend grace, right? The emotional labor you are carrying, again, is very real. And I think there are humans involved at all stages of this, and most of them are not terrible and evil, right? Most of them just don't know what it's like to be you. So it's okay if you want to just invite them in to help them understand what it's like to be you and why it is totally ordinary, necessary, helpful, and appropriate, right, to deduct something.
Amen. Okay, well, with that, thank you so much on behalf of NATS, on behalf of Kari and the NATS chat series. Dr. Elaine Grogan Luttrull, thank you so much for the time that you've taken tonight. I know this is going to cause a lot of percolation of thoughts, and I'm looking forward to how our community sort of unpacks this. We'll absolutely take you up on that dinner. And I would like to say again, thanks so much to Scott McCoy and Inside View Press for sponsoring this series. I would like to invite you on Kari's behalf to go ahead and register for the next NATS Chat event. That will be December 8th, and her guest will be Adam Guettel, who you may know from this little musical called The Light in the Piazza. So he's an acclaimed American composer and lyricist, and I'm sure that's going to be a wonderful conversation. Thank you so much to all of you out there in NATS land. We will give a silent round of applause for Dr. Luttrull. And we will go ahead and conclude now. And Kari is going to slowly welcome all of our attendees to the door. And Dr. Luttrull and I will just hang out here for a second. Thank you so much. Good night, everyone.
Bye, folks. Thank you.